everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering stocks. This will be the first video in my series on stocks and all things stocks. So this will go over the basic introduction to stocks, which will cover 6 key questions over 6 slides. So it'll be a very quick video. So what is a stock? And of course, we are going to be covering the 6 questions, which are: what are stocks? Who can own stocks? Where can you purchase stocks? How much are stocks? Why you should own a stock? And then when to purchase them. So, what is a stock? A stock is a share of ownership of a company. Common stocks are the stocks that most investors refer to when investing. Stockholders can elect boards of directors who hire and fire CEOs. Common stocks earn a share of the company's profit or its losses. So whenever your friends or other investors are talking about stocks, it is generally common stocks. The other one is preferred stocks, and this is a little bit harder to gain information on online. I looked it up. I didn't get too much on it besides that they are stocks that receive a specific dividend at predetermined times. This dividend is often much higher than the common stocks dividend, and this dividend has to be paid out first, even in times of bankruptcy, and before common stock can receive any dividend. So if you have preferred stock of, as an example, Apple, the normal dividend is around 2%, and preferred stock, the dividend may be as high as 10%, and that specific stock would have more features, which I'll go ahead and cover that in future videos as we dive more into specific fields. And of course, dividends are, these days, it's most commonly an electronic deposit into brokerage accounts of a percentage return for holding a stock. As an example, if you have a share of Apple and it's $100 and it pays a dividend of 10%, 10% of $100 would be $10. Now that $10 dividend would be paid back within a year. So $10 within a year, paid every quarter, would be $2.50. So that's just an example, and we will cover that in a future video. So who can own stocks? Some companies are not open to the public and instead are publicly held, meaning that the company is owned by the company's founders, management, or a group of private investors. So up until recently, Snapchat and Blue Apron were considered private. They were basically ran by the company's founders, and they didn't have any publicly traded shares. Now, public companies, on the other hand, have had their IPO, which is their initial public offering, where they're basically reviewed and an analyst decides, your stock is going to be worth $15 at the public, and investors can buy into your stock. And then we'll cover that why, okay, in just a minute. So public companies who have had their initial offering can have any investor purchase common stocks. The easiest way to do this is to open up a brokerage account. And where can you purchase stocks? Robinhood is a great platform for new investors, and the reason I emphasize it is because it offers free stock trading that many other companies charge $4.95 to $9.95 per buy, per sell, per adjustment. If you're normally, if you're signed up for DRIP, which is Dividend Reinvestment Plan, then they don't charge you for the fees. And some other stockbrokers, such as Motif Investing, had charged $9.95 per Motif update or adjustment, or they paid charged a monthly fee of $9.95 for free trading on after hours. So this is a much better deal, and why I switched over to it. It takes about 5 minutes to set up as an easy to use UI interface for new investors that come onto the platform. It's really easy to understand and kind of go through the UI interface. And if you sign up through my referral link, which is in the description below, you and I would both get a random share of Sprint, Apple, or Ford when signing up through a friend's referral link. And so there are many other platforms to choose from. So if you don't like Robinhood, there are many others. Some of that I've used are Vanguard, Motif Investing, and I've looked at another one recently. I can't think of the number or the name, but once I do, I'll go ahead and put that on there in the future. So how much are stocks? Stocks can range from pennies to several hundreds of thousands of dollars. Some penny examples, I don't know any pennies offhand. We'll say Ford is, something as little as $5. I believe Ford's in the $5 to $10 range, whereas Apple is in the $100 range, and Google and Amazon were nearly in the $1,000 range, or are trading in the $1,000 range. So as a first-time investor, you need to use a free screener to search for companies, and that's a good way to begin investing. So as a free screener, there's finviz.com. I don't have it in the description below, but it is available on my website. If you go to my website, go to the resources, at the very bottom, you'll see that there's a free screener. You can go on there and check the price that you'd like to purchase on stocks, say as little as 5, 10, 15, and you're able to adjust it as you like. So stock prices are determined by supply and demand. If more investors want a stock, the demand is high, which will increase the price of the stock. If there is negative news or earnings, this could work in the other direction, causing investors to get discouraged with the company and lower the price. So rumors also affect companies. If there's a rumor of Amazon merging with a competitor of Rite Aid and Sears, then that would drag down their stocks and other retail stocks in that industry. And why would you want a stock? As an owner of a stock, you have a claim to the company's assets and earnings. As an example, ABC Company needs $100,000 to grow their business. Instead of borrowing from a bank, ABC can sell shares of its company to 10 people for $10,000 each, because $100,000 divided by 10 is 10,000. Each stock represents 10% of the company's assets, building material, office supplies, and earnings and more. So if ABC Company grows and does really well within the year or two and increases to be worth $200,000, each share of the company is now worth $20,000, as the initial company worth has increased by double. So if you initially bought into a specific stock, say at $15, I think, which was where Snapchat was initially IPO'd, and they doubled their price in 3 or 4 years out, and their business is booming, and their business is now worth $300,000. So you basically doubled your investment from $15 to $45. And if, depending on the shares that you bought, that's multiplied. So if ABC, we've already covered that. So next slide is when to purchase stocks. And there really is no perfect time to purchase stocks. You should always do your research. You should always assess the company for yourself and never take anyone's word for it. Find out what type of investor you are. There's different types of investors. There's short-term investors, there's long-term investors, there's growth investors who are invested in companies that are not yet returning a profit, but in the long term there's profit in mind, such as Amazon, where they may or may not be returning a complete profit now and they're in debt to build out their company. And then there's companies that are around for a long time that have really good stability, such as Johnson & Johnson, Procter & Gamble, that pay out dividends to their shareholders because they get a bunch of earnings and revenue, and they don't build their company as much, so they pay back to their shareholders in dividends. So when a stock goes on sale, meaning that the price falls below its average, it may be seen as undervalued and a great time to buy. But when doing this, you need to always do your research, and even if it is undervalued, stocks can be a trap investment. Ask yourself, how easy is it for other companies to join into this field, bubble, or moat? How much of a lead does this company have on the market? Companies such as Verizon and AT&T have a huge lead in the telecom field, so it's very hard for other telecommunication companies to come in and jump into the specific field because they don't have all the antennas and everything set up for that field. So always ask yourself, will that company be around in 5, 10, 15 years? How long is your investment time going to take? Are they going to be around in 30 years if you're a dividend investor and wanting to have those dividends paid out to you in the future? And that is it. Very quick slideshow. So again, my name was Brent. I'm with the Financial Investor 101 on Facebook, and my website is financial-investor.com. If you liked the video, I don't really like PowerPoint. It's death by PowerPoint. It's always been my thing. So if you enjoyed the video up until this point, go ahead and hit the like button below, and please remember to subscribe for future financial videos. My resources page is on my website. If you haven't checked it out, go ahead and check that out. If you have any questions on stocks, go ahead and leave that in the comments below. That'll be a good a way of creating future videos on stocks in general, and I will be setting up additional videos on stocks. So thanks for tuning in, and I will see you next time. Bye.